Well, there goes the bell, and it's a big day and it's a soft start. About 0.1 in the green.
Market is down about 17 points. It's tentative, 11,626.
It's an accommodative stance has been negated. 5 people have voted in favor of neutral. But in terms of a rate cut, it's only 25 basis.
Frontline indices flat. The mid-cap index seeing just some gains for now.
Quite a bit of decline right now, especially on the Bank Nifty, now down about close to 170 points.
On the mid-cap side of the screen, Anuj, mixed trends. The index is going home with a minor cut.
The Monetary Policy Committee cuts repo rates once again by 25 basis points, bringing it to 6%. It keeps its stance neutral despite a steep cut to its inflation estimates. Financials take it on the chin.
The repo rate cut fails to enthuse Dalal Street as the market ends near the day's low. The Nifty slips below the 11,600 mark. Sensex gives up nearly 200 points by close.
Bond yields rise on disappointment that the Reserve Bank maintained its neutral stance despite announcing a rate cut and cuts in inflation estimates. The rupee also weakens on fears of FII inflows tapering.
Interglobe Aviation rallies 5% after sources suggest that Indigo may get between 4 and 5 slots of Jet Airways at the Delhi airport.
And stocks news, Dish TV gains after CNBC-TV18's exclusive story that Singtel and Airtel are set to make a combined offer to acquire promoters' 60% stake in that company. Indiabulls Housing also rallies on growth forecasts of 17 to 19% in FY20. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talkback, the show where we are going to tell you all that happened in those 6 hours of trading. And a lot happened. There were stories of Z and stories of Dish and stories of Jet and the macro monetary policy. We're going to tell you all those stories in 5 headlines. I'm Lata Venkatesh, with me, Prashant Nair.
Lata, hi. And as you said, we will talk about the big stories. We'll take your questions as well. And to answer your questions, we have Prakash Devan in our studios. And on the charts, we have Mitesh Thakkar today. Prakash and Mitesh, thanks very much for joining us here on the show. Before we get to the Q&A and start taking those questions, let's wrap up the day's events for you right from the word go. Lata.
Well, actually, the market was heavy with positions. You know, today we can't blame our fall on anybody. Other markets have a dash of green. Crude is a little lower. We have seen it at 69.80. Now it's, just a little straddling $69. We have no one to blame but ourselves. And what kind of a rally we have seen. From February 20th to today, I counted it was about 35 to 40 trading days. Or let's keep it as 6 weeks. In 6 weeks, it's on 110. The Nifty has risen 1,100 points from 10,600 to 11,760. It's a over 1,100 point rally. And at some point, you're a bit heavy with positions. You've eaten more than you can digest. And there was every reason to take profit. And you got the triggers by the handfuls. You got monsoon worries. You got a policy that is not all that dovish. You have a result season coming up and therefore butterflies in the stomach because of that. Crude prices also rise somewhat. So you had enough reasons. FII selling, yes. 1 day of 1,000 crore is enough to rattle the markets, which are running on FII fuel. So that's what you saw, profit taking. And on a day when IT and banks fall, you must accept that it is a bit of an across-the-board selling. There were some, of course, outliers. Pharma stood out, played a little bit of a defensive role here and there, like the DRLs. Media, because of whatever M&A stories, did somewhat okay. Realty has been doing well. It's showing signs of bottoming out, and a rate cut is always a little bit helpful to this interest rate sensitive sector. But other than that, it was quite clearly a market that was overloaded with long positions and it was shedding some. Now we will have to ask our technical experts what is the support. But more color on specifics?
Yeah, so sectorally, Lata, what did well was media. Z there, a big one. We had pharmaceuticals, which did well, and then autos, which the pullback, it continues in the auto space. Sectoral losers, IT, as a pack sold off, energy was lower and private banks were down and out as well. Nifty losers, TCS, HCL Tech, top of the list really. Then it was followed by BPCL from the oil and gas pack, Hindalco. Yes Bank continues to decline for the second day, and IndusInd Bank, which has again seen such a tremendous move, also came off a little bit. Nifty gains in Indiabulls Housing. We highlighted that, and we'll get to this specific stock in a bit. Z, there was Ultratech, which was higher, Tata Motors, and Bharti, which continues to do better. In the broader space, what was under pressure, and all very large volumes on them today. Vodafone Idea continues to sell off. Reliance Capital, Nagarjuna Construction Company, Reliance Infrastructure. There was Ujjivan, which sold off with large volumes. And there was Repco, which was down about 6.5% once again. What did well? Jet was higher. There was Indigo, which was up 5%. SRF, 4.25% higher. There was Varroc, which has done terribly since it's come to the market. But it was up on volumes. I mean, actually was up 7% at one point, sold off from the highs. Bombay Dyeing and Godrej Properties were some of the other broader market gainers today. Lata.
Okay. Well, with that, let's take it to our guests. First up, what are the charts telling us? Is 11,600 sacrosanct. We closed at 598, 11,598. Mitesh, where do we go from here?
So, Lata, we've been talking about the fact that testing the all-time highs was an event, and then we've kind of gone into consolidation. See, as you were rightly highlighting at the beginning of the show, it's been a big rally. I think we're extremely overbought, run away too far from the moving averages. The intraday charts are now showing tiredness. I think 11,550, 11,750, broadly give and take 20 points should be your range, and you should for the next 5 to 6 sessions employ some range trading strategies. Today we did buy on declines around the 11,565 mark, and I think keep a stop below 11,530, and I think on the upside try to sell closer to 11,720, 740 levels.
Okay, we move on to the second story, the second headline of the day. The RBI has kicked off the new financial year with a 25 basis point cut of the repo rate. This was the second successive rate cut, taking the key policy rate to 6% now. 5 out of the 6 members of the panel voted in favour of maintaining a neutral stance as far as the monetary policy goes. Despite a cut in inflation forecast, financials took it on the chin. Nifty Bank ended in the red, dragged lower by Yes Bank and stocks like IndusInd Bank. On the NBFC side, Repco Home Finance was the big casualty, tumbling over 6%. I mean, how does one connect the two, Lata? I mean, in terms of, the rate cut, neutral stance, cut in GDP, lower inflation, but, I mean, the market tumbling.
Well, quite clearly, the market was expecting a more dovish RBI. Maybe only 25 basis, but at least saying that we will accommodate more cuts would have assuaged the market's expectations or lived up to the market's expectations. So quite clearly, it was a disappointed market. Also, as we have been saying, it's a market which is full with positions. The positions were in anticipation of a rate cut. Once the cut came, you have to sell off and take profit. So that was another reason why all the markets, rupee, bond and stocks fell off. The confusion in the policy is exactly where you put your finger. If you have cut inflation estimates by 40 basis points, then is there not scope for at least indicating there is space for one more cut? Okay, don't give 50 basis, but at least say it's an accommodative stance and there could be space developing for more cuts. Throughout the year, FY20, the RBI doesn't expect inflation to go above 3.8. Then where is the rationale to keep the overnight rate at 6? Why can't it come down to 5.75, or at least an indication that by June we'll bring it to 5.75? So that confusion in the policy is fair, and the market perhaps could whine about it. But to be fair to the MPC, ahead of an election, it is more sensible to be cautious than brave. You don't know the colour of the government. You don't know whether it could be so disparate that, you take about 2 months to form the government because people are not able to align. That's not out of the realm of possibility. What will be the shape of the next budget with everyone promising the moon? And what will be the shape of the agricultural season, given the early warning? So in the face of such severe uncertainty, you don't have election uncertainties every day or every year. It's sensible to be cautious. So I would give it to the MPC. They were certainly less dovish than I thought. But mea culpa, I think it was better to be safe than be sorry. And hats off to Governor Das for a very easy and smooth transition from being a North Block executive to a Main Street Mandarin. I think he has done it efficiently.
Okay, and he knows how to handle the questions as well, Lata, right? I mean, that's the other thing. Well, let's listen into RBI Governor Shaktikanta Das on that specific point about inflation outlook as the RBI sees it.
The inflation outlook remaining benign, the RBI will address the challenges to sustain growth of Indian economy while ensuring price stability on an enduring basis in pursuance of its mandate in the Reserve Bank of India Act.
Thank you. Okay. Well, what happened was financials didn't do well, and so we've got a question from financials for our guest Prakash. Sri Vatsa from Bangalore has written to us with a question on Yes Bank. He's been holding 800 shares at 274 rupees for 2 weeks. So obviously a short-term investor. Then I'll go to Mitesh as well. But even for a short-term investor, give us all views, Prakash.
So I'm not surprised why Yes Bank is part of the question, because this is one bank that had rallied for reasons which were more corrective in terms of its sentiment and not fundamentals. Nothing's changed in the last 2 months except for a change of guard, except for a change of stance. The company's business continues to be, the bank's business continues to be the way it was for years. But that's exactly why it's probably taken a little bit of a harsher cut than some of the other banks which otherwise should have succumbed to bond portfolio impact and things like that. That's not happened. And as you correctly said, what RBI did is what it should have done in the position that it was, those three factors so well encapsulated in terms of deciding their stand. But the market did what it should have done, shed its weight. And this started from Monday. You know, it gave way gradually. It had an intra-sector rotation. Banks gave way to PSU banks, gave way to private banks, and NBFCs, HFCs, and today you have everybody flattening. Market in the last 1 hour also did what it feels that the next 3 months or 4 months, you have room for another rate cut. It may not have been defined in terms of timeline because of the uncertainties, but that leaves a lot of room to look for and hope for that. So I think my sense is I would go ahead and buy all my favorite banks, which includes an SBI, which includes Axis if it comes down. Yes Bank also has wings, there's no doubt. My target on this has always been 300 rupees, so it's a matter of conjecture whether you want to buy 250, closer to 250, or you still want to buy 270 and this thing. But hold on to it, 300 is definitely coming.
Okay. But since he says he's short term, 274, he's sitting on 6 rupee losses per share.
So it won't take too long for that 300 also to happen. Okay. I mean, according to me, that short term definition could vary, but the next few months, a couple of months also, he would get that 10-12% that he's seeking. Okay.
What's your take, Mitesh? Should he hold on 268 current price, 274 purchase price?
Lata, I have two reasons not to back this trade. One, I think, is that the stock rallied from much lower levels and therefore is now close to extremely overbought tradings on the charts. The other reason is that when the stock was falling with the negative news, it had a big gap down between 320 to about 285 or 287. That was September 2018. And I think around those levels, because a lot of people couldn't sell with the bad news because it opened and then again continued to decline and fell about 20% in the same day. So I think a lot of supply would be pending at these levels. I think these are not the best levels to enter. Even if you can exit with a 5-6 rupee loss, or maybe hold on, try to get close to his price and then exit, I think that will be a good idea. Yes Bank at these levels is not the best trading buy. I think, we do remember recommending the stock when it managed to get past 200 and 220 odd zones, showing momentum on the upside. Now is the time to take profits there.
Okay. I mean, that 20% decline in September that Mitesh is talking about, that is essentially the day when the extension did not come through for Mr. Kapoor. But yeah, I mean, it's starting to get into that zone. We'll see if it succeeds in getting past and filling that gap. The third story for today, Interglobe Aviation rallied 5% in trade. This comes after sources suggest that some of the unused airport parking slots of Jet are being temporarily transferred to other airlines. Indigo is expected to get 4 out of the 5 slots at Delhi Airport, while SpiceJet may actually get between 6 and 7 slots. We go to question, Lata.
Yeah, Deepak Gupta has written to us from Delhi. His question is on Interglobe Aviation. He has been holding 140 shares of the company, purchased at 765 rupees a share since the IPO. Long-term investor obviously wants to know if he should hold or sell. Oh, yes. He is a long-term investor. What would you tell him?
I would continue holding with that long-term orientation, especially because the stock still has literally and figuratively wings of wind beneath its wings for the simple reason that this quarter numbers could probably be a very significant departure from what we've seen in the last 2 quarters, where yields have been under pressure, the costs have bloated. You had softer crude, higher tariffs, they could hike prices in January, and you have very good PLFs also expected thanks to the issues that Jet and Spice had to grapple with. So at least till the time the numbers are announced, which is first week of May is when I'm expecting Interglobe to announce its quarterly earnings. If you want to book profits, and by that time it could be about 1530, 1540. So another $100 is waiting to be made, and he should reward himself with that patience.
Okay. Well, so if you're not in need of money, don't go ahead and sell now. You may get more.
Just wanted to get a quick sense from Mitesh as well. Mitesh, what would you say? Interglobe, I mean, it's basically got a range of 750 on the lower end since it's listed to about 1400 on the higher side. It's at 1430 now.
Yeah, Prashant, actually, now is the time when it's showing signs of a possible breakout on the upside above that range. You're right to identify the levels. The highest weekly closing we got was 1503, but on the monthly charts, we've never had a closing above 1425, 1430 zones. And you're right there. I think the signs are good. I think 1500, yes, will be some kind of a level where some supply would be or profit booking will take place. But I think eventually the monthly charts show a possible breakout, and that could lead to targets of close to about 1750 to about 1800.
Okay. All right, gentlemen, both of you on the same page, asking him to hold on. On that positive note, we are going to take a break and also get you some opinion. We spoke to Rob Subbaraman of Nomura earlier today, and an ace watcher of Indian economy and markets.
Prakash Devan and Nitesh Thakkar are with us to decode the day's action and, of course, take your questions. We got through 3 headlines of the day, so let's move on to the next one. Stocks and news. Dish TV was higher in trade after CNBC-TV18 learned from sources that Singtel and Airtel are essentially eyeing the promoter stake in Dish TV. Sources said that Singtel and Airtel are set to make a combined offer of over 6,000 crores for Dish TV's stake. This works out to about 55 rupees a share. Nimish, who broke that story, is joining in with the main details. Nimish.
See, that's what I've heard from investment banking sources, that both Singtel and Airtel combined are looking to buy out Dish TV. So basically, it will be a buyout of the promoter stake of 60% and followed by open offer as well. So, as far as what I understand, the contours of the deal is that the size seems to be around 6,150 crores, which works out to a valuation of close to 55 rupees per share for the Dish promoters. Now, given that even the entire promoter stake will be bought, there will be open offer as well for minority shareholders. If you look at Singtel's exposure in Singapore, they are one of the largest players in Singapore with a 81% market share in fixed line, close to 47% market share in mobile market, and close to 45% market share in broadband. I was talking to some of the investment bankers, and the feedback that I got was maybe this whole process will be largely driven by Singtel and not Bharti Airtel at this point in time. Once this is done, they can, over a period of time, look to have a big portfolio of broadband companies in India with regards to Dish TV, with regards to Bharti DTH, and the fact that GIC, which is a promoter of Singtel, they own 20% stake in Tata Sky. So there could be a possible merger of all the 3 companies going forward. That probably is a key rationale why Singtel is looking to look at buying this promoter stake in Dish TV. The sense I'm getting is this is in the advanced stages, and maybe in the next couple of weeks you'll hear probably this deal. So that's the latest that I've heard from. As far as official comments are concerned, Bharti said they cannot comment on market speculation, whereas both Singtel and Dish TV has not responded to CNBC debate inquiry.
Okay, thanks a lot for that, Nimesh. A big breaking story, but we still need confirmation from the parties that it's a done deal. Meanwhile, we have questions. Vikas Garji has written to us with a question on Dish TV. He has been holding 100 shares of the company, purchased at 94 rupees each, wants to know if he should hold or sell. Sitting on losses, Prakash.
And even if the deal happens the way Nimesh has outlined, he still will have big losses. So for the worrisome part in this whole transaction, Lata, seems to be which is from the buyer's perspective is favorable. Time is on the buyer's side. Time is on the buyer's side, not on the seller's side. So the more the time elapses in terms of consummating this transaction, the desperation to sell will be higher. And I don't think a 40% markup seems very reasonable. So 55 adds up to almost 40% from where we are. and would new buyers be willing to give that kind of top dollar? My sense is, he sees a first burst of energy in the stock because of this anticipation. He should just get out. 94 is not happening for sure for a long time, and that he could use that money judiciously somewhere else, but maybe get out at 47, 48, 45, whatever. But I don't know the exact level at that point in time. But the moment it gets close to getting announced or consummated, that's the time to move out.
Okay. Indiabulls Housing also rallied in trade. This after the company said it expects profit growth to the tune of between 17 to 19% in FY20, the current financial year. The stock topped Nifty Financial Services Index. I mean, actually, it was also one of the top gainers on the Nifty itself with the 3.25% gain. It's done very well. Mitesh, Indiabulls Housing?
See, I think the long-term charts are definitely improving. I think the stock has corrected from 1400 to 600 and then now is rebounding. It's hitting the 200 average at 920, so that's only from a trading point of view. But I think my sense is that I think eventually it will cross that and maybe head towards 1050, 1100 kind of levels. So I think that's a hold for me. I think I'm not sure we'll get much upsides beyond those levels. So I think around those levels, if he wants to book and switch into something else, that will be a good idea. Okay,
Prakash.
I think I corroborate at least the trajectory that Mitesh has identified. There seems to be a pullback which is sustainable, and you might not see those 600 levels come back, unless there's another shocker that's waiting to be discovered.
No, they're actually guided that they will do 15 to 17%.
Yeah, so that kind of, justifies this kind of thing. It's just a matter of people putting more money where the conviction is. So 1,000 plus could be a decent level. It gives that 20% yield to the investor as well. And then you revisit the whole scenario at that point in time.
All right, and with that we come to the fifth and the last headline. Today, bond yields rose on disappointment that the Reserve Bank has maintained its neutral stance despite announcing a rate cut. 10-year bond yield climbed just before the policy announcement, and it continued to rise through the day. So pre-policy, it had fallen to about 7.23 and then went on rising, about 10 basis higher. The rupee also weakened considerably on fears of FII inflows tapering off. Well, I just want to spend a little bit on this because we already discussed the policy. For the yield market, what was immediately negative was that the Reserve Bank has reduced the amount of their percentage of their deposits that banks have to compulsorily keep as government bonds. Under the SLR rule, they have to keep 19.5% in government bonds. And then there is something called an LCR rule, liquidity coverage ratio. They have to keep an additional 6-7%. It differs from bank to bank. Now what Reserve Bank has said, a part of the SLR can be counted as LCR. So now about 2 percentage points of their deposits, which they were holding as bonds, can be sold off. That could be an initial negative knee-jerk reaction that some supply could come. Some buyers will be absent for a little bit. That could be the disappointment. Could also be that you were expecting more dovishness. So you were already positioned long bonds and therefore you sold off and the yields went up. On the rupee, it's a totally different story. It's got really very little to do with the monetary policy. This is the large exposure rule that kicked in on April 1st. Banks were all units, banks, corporates, banks were told you can't have more than a certain cutoff exposure to one entity. Now, all these Citibanks, HSBC, StanC, whatever, the entire foreign banks have exposure to their own foreign banks, their parents, and some of them had not brought down the exposure. So they had to cut that exposure in a hurry, selling dollars. Dollars shot up over the past 2 days. Today there was position adjustment, that's all. So it's a very, very technical problem, what happened in the dollar rupee.
Okay, so that's the yield and the rupee markets also covered. Prakash and Mitesh, thank you very much, both of you, for joining us here on this edition of Markets Today Talkback. We also wrap out of the show. Thank you very much for staying with us. There's more coming up.